Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 22nd of September. All right, now just coming into the start of the Asian session here for Tuesday. We've got a clear risk-off sentiment, right? The Dow down 1.8%. Now, it looks like, what the news articles out there are saying, risk on uncertainty around the US elections, big spike in coronavirus cases, is creating that risk-off situation. Now, the good thing is, just looking at the correlation matrix, check out the Dow Jones here, right? This is lighting up the boards with some very high correlations, positive and negatively, with the movement in the Dow. So it's pretty easy to isolate, which potential pairs to be trading. So keep an eye on that. It doesn't get easier than that. And it's as I said, the last sort of week, there's been a bit of a disconnection between the equity markets and the currency markets. And that has really kicked into gear. So if I bring you back to the dollar, you'll see this huge spike. The dollar index was just cruising sideways. And if anything, just having a little sneak to the downside. And then it's just massively kicked into gear, right? So this is good. And the situation is, let me just show you the rest of the major currency pairs. We've got a situation where the majors, they've been flushed out, not only on the hourly charts, but also on the daily charts, right? So you've got these massive moves down. We've got some levels here to be selling on rallies or buying on dips. Dollar CAD down here, selling sterling back towards that new line. I'd say euro back probably towards 117.80, but basically this is a really big clean out. And we've seen these setups before over the last, say, 6 months where we do get this massive clean out in the dollar. We just haven't had that connection where the equity markets continue to tumble, or that, there's no two or 3 days in a row where the momentum really builds and we get a really clear, decisive move. So just keep an eye on this as we go forward. But out of all the pairs, like euro here, it's probably the one pair that is just starting to break down on the dailies, right? Whereas you look at, say, sterling, it's had a bit of a meal of that, but you can see here where, it's broken down clearly there. Aussie and Kiwi also probably pairs that are just starting to get going, right? And there's no other sort of support levels here. You'll have these big round numbers, but outside of that, there's not a lot of support. Now, we've had a lot of these false starts, and you can see the Kiwi doing the exact same thing. So the hard thing is to work out, with the number of false starts we've had across the board when these currencies have done this and the dollar has sort of kicked into gear, there's no follow through. So to me, it's a situation, if I just bring you back to the Daily Market Insight, where I'm sort of more looking for, sell on rallies. Okay, if I just bring you back to the main technical part here. So looking to buy dips of the dollar pairs, right? It's very hard to get caught or start buying at the current levels, right? They've already moved so far. You're waiting for the market to just retrace a little bit, whether it's down or up, and then go with the move from there. And the dollar block, euro, sterling, Aussie, and Kiwi, well, looking to sell these pairs on rallies for the moment. Now, normal market conditions, this is the situation you have to understand. If these moves were on the back of a central bank, right? So the Fed changed rates and the dollar went aggressively higher, you can really have trust and confidence in the move. The only situation is it's the ongoing uncertainty around the geopolitical outlook, which is creating the move. So that can be quite fickle. So what I'm trying to say is, will this current market direction moves and momentum remain in the market for more than a day or two? I'd like to think so, but you know what? Since it's a geopolitical event, I can't be super confident. So, looking to get into these trading opportunities here, especially on these pairs, buying dips or selling rallies, I'm probably reducing my trade size initially because I'm not super confident whether this is just a clean out or the start of a bigger move. Now, the US election is about 6 weeks away. If the news that I'm seeing, and let me just take you across to that, if the news is consistent with what it is, uncertainty around the US election and COVID-19, well, you know what? That's going to remain uncertain for the next 6 weeks. So we could see a really solid dollar move What you want to see is, I'd say if we start to see some polls where Joe Biden is actually winning convincingly, then the uncertainty is going to get a lot more uncertain, you know. And Donald, since he's been president, all he's been concerned about is getting the equity markets through the roof to record levels. Now that whole picture could change if Biden gets in. We might see some consistency with global policy and a whole range of changes. And that uncertainty alone will create probably a dollar strength situation around that uncertainty. So just keep an eye on this. You're going to see a lot more US politics coming into play. Obviously, he's got to replace RBG, etc. And he's got lots of stuff going on. You'll see the rest of the news regarding China, everything sort of take a backward step as this becomes the story. Now, you come down and have a look at the what data we've got coming out. We've got quite a few central bank speeches. There's some judgment on whether the Chinese, I think bonds or something I was reading, that could join some global market. You think that'd get shut down, but we do have a number of things to focus on. There's key data, but there's lots of officials talking. So make sure you keep an eye on this. Mukin is speaking later on in the week. You might want to have a look at that as well. Sorry, I'm on the wrong screen. Just scrolling through the fundamental releases here on the Daily Market Insight page. So lots of speeches and things going on. So with the speeches, they're a little bit harder, obviously, to manage than the economic data because, you know, they can be a bit contradictory, positive and negative, and positive and negative. Hard to work out what's going on, but all I'm telling you where I will be sort of focusing on, and that's really looking right now at the equity markets. Looks like the Dow is back into gear. The Nasdaq's taken a little back seat. And funnily enough, it's the only indice there that is positive, but the Dow Jones seems to be the pair that is lighting up the boards, and that's what everything is following. Okay, look at the Nasdaq over here. There's no massive correlation. So focus where the market is telling you to focus. All right, guys, have a good trade day. This could be the start of a really good week. Hopefully this isn't a false start and we get some follow through, some slight retracements first to get you into the trade, and then watch them roll over during that North American session. Have a good one, guys. Cheerio.